try to wind up this thing in 2 minutes. Now you see, we'll look into various products and services offered by foreign banks or Indian banks who are catering to international segment. NRI segment is very important. Here, NRI means non-resident Indians. So under NRI segment, you will find two types of accounts. One is a non-resident external, and second one is non-resident ordinary. So you see, when you come to India, you are a NRI, means you are residing out of India, working, or maybe for higher studies you went out, and then now you have started earning some money there. So what you will do is like you will be sending your money back to your home country. So when you send your money into Indian accounts, so it can be either NRE or NRO account. Okay. So the major facilities that NRIs expect from banks is like they want remittances, they want deposits, where rate of interest should be attractive, tax rates should not be there. Remittances like withdrawal of money from India and again taking them back to foreign countries should be allowed easily. So NRE, NRO, these are two different types of accounts. In NRO, non-resident ordinary, rate of interest will be high, and if in Indian market it is 7 or 8%, you will be given 7 8%. But NRE is another account where rate of interest will be as per global market rates, which will be, let's say, 3 to 4%. But they do have a privilege. One privilege is if they want to withdraw this money and then they want to take it out of India anytime they want, they don't need any approval. Okay, so this is the difference. In NRO account, if you have brought in some money and you would like to take it again back to foreign country, then you have to refer RBI's instruction. Okay, withdrawal is not easy. So withdrawing money from India and taking it to foreign country is not easy. Let's go forward. Now, in case of corporate banking, various corporates may require banks to help them in loans. Remittances means faster collection of their proceeds, checks, something that they have got in their normal course of business. Letter of credit. Letter of credit is actually a supporting document which will help your counterparty. Like you are a businessman, you are trying to import something to India from Japan. Now you see the other party, which is a Japanese firm, is not interested to send you free because they are feeling an element of risk. So this letter of credit is actually giving a sort of guarantee to that foreign party that on the due date or which is on a future date, payment will be made. If not by the party, but by the counterparty. Now you see, along with this, we do have a concept called as letter of understanding. Now you see, this letter of understanding term was widely used in case of PNB Nirav Modi scam. Okay, so this was what was actually misused. So corporate loans, cross-border remittances, trade finance solutions. Now you see, these are some of the facilities under corporate banking division. Now, next requirement is like in trade finance, we do have something specifically related to import and export, pre-shipment and post-shipment facility, where you see loan can be taken from a bank. You see, when let's say we take an example where I'm a person who is sending goods to someone in Japan. Okay, I'm sending goods, so I'll be getting my payments. But when I'm going to get my payment, maybe I got 20% as advance payment, and I'm going to get my 80% on a future date, fixed, predefinite future date. Now you see, when I'm going to get my future payment, it is for me. There is a waiting period. What if I need some money in advance? Can I get an advance facility from my bank in India so that I cover up for my existing expenses and I can pay them back later when I'm getting this payment? So yes, you can get this under pre and post shipment credit. So shipment means you are sending some goods out of India. Pre means before sending the goods out of India, you get some facility, financial support. Post means once shipment has gone and maybe in process or in transit, so you can further get some funding from your bank to take up your day-to-day expenses or working capital requirement. Next is like usually rates need to be very competitive because I'm a banker and you are a customer, and if you are a customer you'd like to have the best offer from market, so we will try to offer you best competitive rates. And last is like this entire facilitation documentation should be smooth, error free, without much of hassle. So if it is streamlined, things customer can enjoy the facility very well. Next is like you see foreign banks or Indian banks who are catering foreign clients, they have to take care for foreign exchange. So when I say foreign exchange management means I have to arrange it from somewhere if you need, and if you have something surplus in your pocket, I have to dispose it for you. So you see, arranging as well as disposing of foreign currency, banks can help you in it. provided banks do have, like you see, every branch in a bank is not authorized to do foreign exchange transaction. Only specialized branches are given. Like I tell you, Fagwada is a place where you get every family has some NRI base. So if you have NRI base means they are regularly sending you some remittances. So most of the branches in this particular region, they will have foreign exchange facility with them. If I go to Delhi, New Delhi CP of South Indian Bank has this facility. But for every branch to get a foreign exchange license, we don't have this facility available. RBI restricts the licensing part. Okay, only few where it is badly needed is what they offer. So currency exchange, remittance, for businessmen where they have to make a future payment that to in some foreign currency, and they are thinking of currency valuation risk, like where value may go up and down. So you see they may go for hedging contracts. So they, you see here bank is acting as a facilitator for a client who has some foreign exchange exposure and he would like to secure his position. So you see hedging contract can be allowed. Trade finance means anything to do with trade, anything miscellaneous in nature, like letter of credit, bank guarantee, supply chain financing, everything can be done. Any bill discounting can also be there. So let's move forward. Now you see, once you are dealing with these clients who are high net worth clients, because you have a foreign exposure, you're getting foreign exchange. Now, hence, you see, this segment is very, very important from bank's perspective, because we bankers can help you with wealth management. Now, you see, if you have money and you need a money manager, banker can do it for you. They help you to plan your investments. They help you to plan your retirement. They help you in estate planning. Estate planning means when you have some properties at your disposal and you have a feeling that after your death, it's very tough to manage it between family members. So you see, they help you. Banks can act as an agent for estate planning. And finally, when banking is helping you on all these dimensions, so they also act as a tax advisor. So they ensure the client should not be paying much of money in taxes. So another one more dimension where bankers can come and help these clients, international clients, is like they can help you through investment banking domain. Now you see, investment banking major role is like, let's say, I'm a businessman, I would like to acquire another agency. This agency is lying in South Africa, but I don't have any connections in South Africa. So I need to rely on someone who is going to act as an intermediary. So I may ask my bank who is having a connection in South Africa to support me in this merger and acquisition deal. So what they'll do is like they'll help me in local imports, they'll help me in valuation, they'll help me in arranging a good party, they'll help me to identify competitive options where I can opt for it. Now you see, they help me in every aspect according to my requirement. Next is like these investment banks can help you in making your investments in capital markets. Now this is not small ticket investment that we are discussing. This is bulk investment. Now you see, HNIs and corporates can take international exposures, not only to invest in Indian markets but also to invest in foreign markets. Wherever you see an opportunity, investment bankers will take you there. Okay, same is in case of research and insights. So if you give them a contract to look into any of your situation, so that you get some way outs from your existing level of issues and problems. Now you see, they'll take your contract, do research, and will come with certain fact finding uh, strategies and decisions. Okay, so they'll help you in your affairs. Now treasury services is mainly managing your investments. Now here they have kept in foreign exchange as one segment, liquidity management as second segment. Liquidity management means what? Cash flows. Cash is coming in, cash is going out. Now you see, what you need to do is like you need not to be either into a surplus state or you need not to be into a shortage state. You need to have optimum balance of cash. Now who will help you? Treasury services may help you. If you have excess, they'll dump it to some other required, to other party where it is actually required. And when you have scarcity, they'll arrange it from some other channel. Okay, so this is what is liquidity management. Then you have risk management and investment solutions. So when you take care for all these for your clients or clientele base, and you see this is where we are actually understanding the role and relevance of a bank offering international services. Okay, so digital solution. Now you see we are living in a digital era, so no one need to go to a bank branch. Why should I go to a bank branch when I can do all the transactions from my sitting at my room? So I just need an internet login and a password. Okay, once I have it, then I can get anything done. So let's see what are the benefits of digital banking solutions that are being offered by international banking division to their clients. Now you see you get convenient access 24 into 7. You get innovative features like you see cutting edge technology. You can scan your behavior. You can customize your product. You can do transactions on real time basis, monitoring yourself in terms of expenditures, personalizing your like you see product offerings is what is going to enhance your banking experience. Now next is like you see not only this, you also get add-on products like insurance. You do get depository services. You get investment options. Now you see you are getting everything in under one roof. Okay, so is great. Last is like you do get enhanced security system where you see encryption and fraud detection is actually preventing any sort of fraud to happen. So when you are dealing with institutions who do have global presence, and you are again you see you have to make sure that they do get their security, they do get their trust factor in place. So you need to be spending a lot on R&D, and you need to make your system foolproof so that there is uh, no element of cheating or fraud possible. Now, finally, we are coming to a topic called as correspondent banking. Correspondent banking. In our last lecture, also we had a discussion on it. Now, this banking is where you see you are actually facilitated by some of the middlemen, some of the banks who do have their presence in those countries where you need to get something done. So instead of going directly of your own, you can ask some of your intermediaries or facilitators. Now you see this is where correspondent banking will help you a lot. Correspondent banking allow us to leverage our extensive international branch network to facilitate cross-border transactions and payments. Now you see Bank of America, American Express, they have their branches all across the globe. So they don't have any problem sending funds from one country to another country. But for other institutions like SBI may not have their branch in every country. So they may struggle to deal with certain clients in certain areas where they don't have a branch. Hence, you need to have someone who is a representative bank, will be acting as a correspondent for you, and will be completing the transactions in a time bounded manner. Seamless integration. Now you see when you bring in this thing, what you understand is like you're building up your networking, you're making your infrastructure. You see you don't own it, but still you're building an infrastructure so that in times of emergency you can rely on these systems. Now you see transparent correspondent banking service is what is the need of our. Okay, so if you bring transparency here, if you bring the costing down, so you see this is what is actually the need of our. Your overall cost of operation will come down, your profits will go up, and this profit may be shared between all the partners equally or in some agreed proportion. Same as in case of trade facilitation, they correspondent banks to help you in bringing in a comprehensive trade finance solution, including letter of credit, collection, supply chain financing to support your global business. Now you see this is what is on global banking. Thank you. Hope you got this topic clearly. See you later. Bye.